Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by EQB Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapprove.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're starting with a significant development in Ontario's real estate sector. The Ford government has announced it will intervene in an extensive review of the Real Estate Council of Ontario, or RECO, following a scandal involving iPro Realty. This comes after a deal was cut allowing iPro's co-founders to escape charges and fines after a major financial breach.
That's right, Steve. The Ministry of Public and Business Service Delivery and Procurement, led by Stephen Crawford, is stepping in. They plan to issue a ministerial letter soon to outline the details of their intervention. It's clear that the government is taking this matter seriously.
Absolutely, Janine. And it's about time, considering the scale of the scandal. Legal experts have pointed out that the government has the authority to take over RECO if necessary. The crux of the issue is that RECO facilitated the transfer of agents to a new brokerage, iCloud Realty, after iPro's assets were involved in an illegal disbursement of over $10 million. This has left many agents and consumers demanding accountability.
It's really concerning, Steve. Many former agents of iPro who were automatically moved to iCloud have reported not receiving their commissions for months. Some are owed as much as $150,000. You can imagine the kind of stress they're under, not knowing when or if they'll get paid.
Yes, and RECO's CEO, Brenda Buchanan, has stated that their focus is on protecting the public and restoring trust in the system. But with the sudden resignation of their longtime registrar and the hiring of external auditors, it seems like they have a long road ahead to rebuild that trust.
Indeed, Steve. The fact that RECO hasn't formally requested an investigation from the police adds another layer of concern. It raises questions about the effectiveness of their oversight and transparency. The agents and consumers involved deserve clear answers and swift actions.
And let's not forget the broader implications. Mark Morris, a real estate lawyer, has emphasized that this incident is symptomatic of a larger governance failure within RECO. The organization oversees over 110,000 real estate agents and brokerages in Ontario, and it's critical that they operate with integrity and accountability.
That's a good point, Steve. It's not just about this one case. The governance structure of RECO needs to be reevaluated to prevent future incidents. The public's trust in our real estate system is at stake. We need a system that genuinely protects consumers, not one that just manages optics.
Exactly, Janine. The Ford government's intervention is a step towards addressing these issues. However, as Brandon Rhee, an industry observer, notes, unless there are meaningful changes in RECO's governance structure, similar failures could happen again. It's a critical moment for Ontario's real estate industry.
Steve, we have some intriguing developments regarding Canada's economic performance and its potential impact on interest rate decisions by the Bank of Canada. The latest GDP report has shown a surprisingly weak performance in the second quarter, which has shifted market and economist views on future rate cuts.
That's right, Janine. The economy contracted by 1.6% on an annualized basis in the second quarter, which is a stark contrast from the 2.0% growth we saw in the first quarter. This is the first quarterly contraction in 7 quarters, and it has certainly caught the attention of both the markets and economists.
The contraction was larger than anticipated, driven in part by U.S. tariffs squeezing Canadian exports. This has led to an increase in the market-implied odds of a rate cut by the Bank of Canada in September, rising from 40% to about 47% after the GDP figures were released.
Economists are weighing in on the implications of this data. For instance, David Rosenberg from Rosenberg Research highlighted that Canadian business investment has significantly declined, which could be bad news for the labor market, as companies might trim their capital expenditures and hiring plans.
It's concerning because a weaker labor market could lead to reduced consumer spending and further economic slowdown. Veronica Clark from Citi pointed out that the economy is already in excess supply, and a rate cut might be necessary to close the output gap.
Meanwhile, some economists like Derek Holt from Scotiabank suggest that the domestic economy was actually stronger than the headline GDP numbers indicate. He emphasizes the strength in final domestic demand, which includes consumption, investment, and government spending, showing a 3.4% increase.
That's a good point, Steve. While the headline numbers look bleak, the underlying domestic demand shows that there might be some resilience in the economy. However, the upcoming employment and consumer price index data will be crucial in determining the Bank of Canada's next move.
Exactly, Janine. The Canadian dollar and bond yields reacted immediately to the GDP data, with the dollar falling slightly and bond yields taking a turn lower. This reflects the uncertainty and anticipation surrounding the Bank of Canada's decision.
And it's not just about the numbers. Economists like Royce Mendez from Desjardins Securities have noted that the easing trade tensions with the U.S. could provide some relief, but the Canadian economy is still not performing at its full potential.
Yes, and as Benjamin Reitzes from BMO Capital Markets mentioned, the strength in domestic demand is comforting, but it's still early days, and we need to see how the third quarter unfolds. The Bank of Canada is likely to consider all these factors before making any decisions on rate cuts. Janine, it looks like EQB Inc. has taken quite a hit recently, with their shares dropping significantly due to the slowing Canadian economy and housing market. This marks the largest intraday fall since 2020. Their earnings have been dampened by these economic conditions, which is a trend we're seeing across various sectors.
That's true, Steve. EQB had to set aside 60% more for potentially bad loans compared to last year, which is quite a substantial increase. This is largely because the uncertainty in the macroeconomic environment and the weakening housing market are impacting their credit performance and interest income.
It's not surprising, given the high unemployment and interest rates we've been facing. These factors historically lead to higher default rates, particularly in areas like the Greater Toronto Area, where house prices have dropped by 25% to 30%. EQB's Chief Risk Officer Marlene Lenarduzzi mentioned that they are closely monitoring these pockets and have provisions in place, but it's still a challenging situation.
Yes, and despite their efforts, EQB's adjusted net interest income still slipped by 6% to $254 million compared to the previous year. They also reported an adjusted earnings of $2.07 per share, which fell short of the expected $2.48. This is quite a miss, as noted by Gabriel Deschênes, a National Bank financial analyst.
EQB's performance certainly stands in contrast to the Big Six banks, which have mostly reported earnings beats this week due to lower credit loss provisions. It's a tough spot for EQB, and they have even lowered their full-year guidance for 2025, suggesting another soft quarter ahead.
And let's not forget, Steve, that this quarter also marked a significant leadership change for EQB. Chadwick Westlake, their former chief financial officer, stepped in as chief executive officer after the unexpected passing of their longtime CEO, Andrew Moore. It's a pivotal moment for the company.
Definitely, Janine. Westlake emphasized that their focus remains here in Canada, and they won't be distracted by other markets. It's a sensible approach, especially in these uncertain times. They also appointed Annalisa Sainani as their new chief financial officer. She brings experience from her previous role as Chief Operating Officer in the CFO Group at Royal Bank of Canada.
It's a challenging time for EQB, but with a strong leadership team, they might navigate through these difficulties. The housing market and economic conditions are tough, but it's about how they adapt and manage their risks moving forward.
The housing crisis in Canada is a topic that's been making headlines recently, and it's clear that significant changes are needed. A new report has highlighted the need for Canada to build 3.2 million new homes over the next decade to restore affordability. Yet, we're currently falling short of this target, with only an average of 227,000 new homes expected to be built annually, according to the Parliamentary Budget Officer.
That's a staggering number, Steve. It's heartbreaking to think about how many people are struggling to find affordable housing. The Liberal Party, led by Prime Minister Mark Carney, has made home building a central focus of their platform, aiming to ramp up production to 500,000 homes a year. They've even proposed a new entity, Build Canada Homes, to boost affordable housing and incentivize development.
It's an ambitious plan, Janine, but there are hurdles to overcome. Kevin Lee, CEO of the Canadian Home Builders Association, pointed out that development charges are a significant barrier for builders. Municipalities need funding for infrastructure, but relying heavily on development charges isn't the most efficient method. Lee suggests exploring alternative funding models, possibly involving federal and provincial support, or even public-private partnerships.
Absolutely, Steve. Lee also mentioned the disconnect at the federal level regarding the National Building Code. Recent changes aimed at harmonizing codes across provinces have inadvertently increased construction costs, which is counterproductive during an affordability crisis. Lee advocates for affordability to be a core objective of the building code to prevent unnecessary cost increases.
That's a valid point, Janine. The Greater Toronto Area is facing its own set of challenges, particularly with a condo crisis looming. Despite a flood of new condo units set to enter the market, developers are pulling out of projects due to high prices, steep carrying costs, and smaller unit sizes. Joel Fox from OwnRight notes these factors are keeping younger buyers on the sidelines.
It's a complex situation, Steve. Kevin Lee believes that while the condo market is facing issues, it's crucial not to lose sight of the broader housing crisis. The GTA remains a major draw for immigration and businesses, so revitalizing the construction market there is essential. It's about making systemic changes to ensure a sustainable housing supply.
Indeed, Janine. Addressing development charges and aligning building codes with affordability are steps in the right direction. But as Lee emphasized, it will take years to get the housing market back on track, especially in areas like the GTA. The key is to create a balanced approach that supports both builders and consumers.
It's a challenging road ahead, Steve, but with the right strategies and collaboration between government and private sectors, there's hope for meaningful progress. The housing crisis affects us all, and it's essential to keep the dialogue open and solutions focused.
Now, Janine, let's shift our focus to the best fixed and variable mortgage rates available this week. It's always crucial for our listeners to stay updated on their options, especially with the current economic conditions.
Absolutely, Steve. With the Bank of Canada's next rate decision just on the horizon, many Canadians are keeping a close eye on mortgage rates. Currently, the markets are largely expecting the bank to hold interest rates steady, but there's still a significant chance of a rate cut which could influence mortgage rates.
That's right, Janine. The money markets are pricing in nearly a 60% chance of rates staying the same, but the odds of a 25 basis point rate cut are just under 40%. This is largely due to the softer inflation data we've seen recently. And with 3 major data releases coming up, including the GDP report, federal jobs numbers, and inflation figures, there's a lot of anticipation around what the bank's decision will be.
Yes, and for those considering their mortgage options, ratehub.ca has listed some of the best rates available. They offer a comparison of mortgage rates, which can be invaluable for Canadians looking to make informed decisions. It's interesting to see how these rates fluctuate with economic forecasts.
Indeed, Janine. Ratehub.ca is a great resource for comparing current rates, and they show the lowest available rates for each term and type as of the market close on August 28th. It's vital for homeowners and potential buyers to keep an eye on these rates as they can impact their financial planning significantly.
And it's not just about finding the lowest rate, Steve. It's about understanding what fits best with one's financial situation and long-term goals. Fixed rates offer stability, while variable rates could lead to savings if interest rates drop. It's a balancing act, and tools like ratehub.ca make it easier to navigate.
Absolutely, Janine. As we approach the Bank of Canada's next rate announcement on September 17th, it's a good time for Canadians to reassess their mortgage strategies. Whether the rates hold steady or we see a cut, being informed is the key to making the best decision.
It's true, Steve. Staying informed and prepared can make a big difference. And with resources like ratehub.ca, Canadians can access the information they need to make sound decisions for their future. Let's hope for favorable conditions that benefit homeowners and potential buyers alike.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.